You have been chosen.
We back at it again. Clifford Bey, right? So this is about consumer law. Uh, I'm not going to teach you any processes on how to form your argument. I'm gonna just show you things. Um, I'm gonna just show you violations that may be happening within your consumer credit contracts that's dealing with personal loans or auto loans. All right. Now, it could be happening with the mortgage loans, but I'm not too skilled on the mortgage loan, so I'm not going to get into all that. Or I'm not going to get into student loans either. All right, so this is more about personal loans and auto loans. However, student loans and mortgage loans have accounts. So I am going to touch on uh, the irregularities or the unlawful acts that may be happening with the accounts. All right. So with that being said, let's proceed. All right. So here we got congressional findings and declaration of purpose. Title 15, United States Codes, Section 1601. Right. And this is what it says. The Congress finds that economic stabilization will be enhanced and a competition among the various financial institutions and other firms engaged in the extension of consumer credit will be strengthened by the informed use of credit. The information used of the informed use of credit results from an awareness of the cost thereof by consumers. It is the purpose of this chapter to assure a meaningful disclosure of credit terms, right? Keyword, disclosure of credit terms, right? So this chapter, the subchapter, right, is to assure a meaningful disclosure of credit terms so that the consumer will be able to compare more readily the various credit terms available to him and avoid the uninformed use of credit and to protect the consumer against inaccurate and unfair credit billing and credit card practices. All right. So now let's get into it. Let's get some definitions. All right. So first, the term person, right, is defined means a natural person or organization. The term organization means a corporation, government, or governmental subdivision or agency, trust, right? That's an important word, trust, a state, partnership, cooperative, or association, right? The term credit means the right granted by a creditor to a debtor to defer payment, right? Defer payment. We need to help understand that defer payment of debt or to incur debt and defer its payment, all right? The terms open-end credit plan, An open-end consumer credit plan means a plan under which the creditor reasonably contemplates repeated transactions, which prescribes the terms of such transactions and which provides for a finance charge, which may be computed from time to time on the outstanding unpaid balance. All right. The term credit card means any card, any, right? Means any card, plate, coupon book, or other credit device existing for the purpose of obtaining money, property, labor, or services on credit. All right. The term cardholder means any person to whom a credit card is issued or any person who has agreed with the card issuer to pay obligations arising from the issuance of a credit card to another person. All right. Unauthorized use, another important, right? Another important term. The term unauthorized use, as used in this section, means a use of a credit card by a person other than the cardholder who does not have actual, implied, or apparent authority for such use and from which the cardholder receives no benefit. All right. Now, if you watch my other videos on how to maintain your sovereignty, the term state refers to any state, the Commonwealth, of course. So technically, since the term state is not in lowercase, that means the term person means the natural person is not really the natural person because anybody of the district state is not a natural person. All right. So I hope you understand that. So you can't say you're a person within this title because in order to be a natural person under the term state, it got to be a union state, which the union state is not included within this definition. All right. So technically, they're talking about the trust, which is the Social Security trust, right? Which is connected to your credit card, right? The credit card is the Social Security card, right? Because let me ask this question. What's credit card, right? It means any card, which is use your Social Security card, right? For the purpose of obtaining money, property, labor, or services on credit. That's what they ask you for, your Social Security card. So under consumer law, your Social Security card will be considered a credit card, right? Because you could prove that you obtain property, labor, or services on credit by the use of, mentioned card. All right. And unauthorized use of this card will be, someone who doesn't have authority for such use and from which the cardholder, which is you, receive no benefit, right? Gotta understand that. All right, let's continue. Material disclosures, right? Means the disclosure as required by this subchapter of the annual percentage, the method of determining the finance charge, right? Finance charge is very important, and the balance upon which a finance charge will be imposed. All right, so material disclosure must uh, disclose the finance charge. I want you to remember that. All right, so now let me help you understand that the Social Security number. So right here, protecting the Social Security number, right? and Social Security number card. And this is cited as RM 10201.065. You could Google this, and this right here will pop up, right? And that's what it says. The Social Security number card is not an identification document, and the individual is only required to show the card when requested by a new employer. Now, under the tax law, we know that we don't have employers. I'm going to do a video on that and help you understand why we don't have employers and why we are not employees. All right. So, for purposes of recognizing a Social Security card and number as not being an identification document, we could cite this. All right. So when a creditor asks us for a Social Security number and card, they can't say, "Oh, we're just using this for identity purposes." No, you're using it as a credit card, and pursuant to this section right here, it is not an identification document. All right. Let's continue. So now that we got that settled, right? Let's see if we can get to some irregularities or some violations. Now that I gave you the definition. All right, so you know what? Let's go over some more definitions. So we need to understand under the what is this? Equal Credit Opportunity Act, right? Which regulate accounts. Maybe not the how should I say, the promissory note document, but the account associated with the promissory note document, right, is regulated by this section right here. The negotiable instrument I'm talking about, the promissory note. All right, so authority and scope, right? This part, known as Regulation B, is issued by the Bureau of Consumer Financial Protection Bureau, right? Pursuant to Title 7, I believe that's Title 7, or no, Title 6 of the Consumer Credit Protection Act as amended 15 U.S.C. 1601. Except as otherwise provided therein, this subpart applies to all persons who are creditors as defined in section 1002 .2 L. Other than a person excluded from coverage of this part by section 1029 of anyway. So, reason why I bring this section up, right? Because a person, you go to a dealer, right? And they'll assign your loan over to a financial institution. And you'll come back and try to sue the dealer, and they say, "Oh, well, you know, that section don't apply to me," or, you got to go after the financial institution because, it has nothing to do with me anymore. It has something to do with them, right? However, right, under the on a contract, it says on a contract, right? This is what it states. This is what all consumer credit contracts supposed to state, right? Notice, any holder of this consumer credit contract is subject to all claims and defenses which the debtor could assert against the seller of the goods, which the seller would be the dealer, right? Or services obtained pursuant hereto or with the proceeds hereof. Recovery hereunder by the debtor shall not exceed amounts paid by the debtor hereunder. All right. Anyway, so right, the contract you can still sue, right? The seller could still be sued. That's why they gotta give this notice, right? And we're talking about the consumer credit contract. All right. So if a seller saying that, oh, he has signed a contract already, he's not liable. No, you're still liable. That's why they gotta give this notice. All right. And this is the law right here. 16 Title 16 Code of Federal Regulations, Section 433.2. Preservation of consumers' claims and defenses, unfair or deceptive acts or practices. All right. All right. Let's continue. Now let's go to right here, Section 1002.2L, and see who are considered creditors. Right. All right. Let's go to L. All right. So creditor means a person who, in the ordinary course of business, regularly participates in a credit decision, including setting the terms of the credit. The term creditor includes a creditor's assignee, right? So the seller is the creditor, right? And the assignee, which is the financial institution, could also be considered a creditor, all right? Transferee or subrogee, whatever the hell that is, who so participates. Now, these are not considered debt collectors. So you cannot go after a creditor under the Fair Debt Collection Practices Act. The Fair Debt Collection Practices Act is for third-party debt collectors, right? They are not considered assignees. Someone sold them the debt and now they're trying to collect, which is illegal, by the way. But if you don't refute their claims, which you have 30 days to refute, and then they could report you on the credit report. Or they could assert their claim and report you on the credit report until you refute their claim. All right. But if you're trying to go after the creditor, you cannot go after the creditor under the Fair Debt Collection Practices Act. You got to go after them under the consumer credit, not consumer credit. You got to go after them under Regulation Z, as a creditor. So Regulation Z are for creditors, all right? And the Fair Debt Collection Practices Act is for debt collectors, which creditors are not considered debt collectors, all right? Despite them collecting the debt. All right, so let's move forward. All right. So now that we got that understanding, so you got your consumer credit contract, right? Now they got to give you disclosures, right? All the material disclosures, right? And in that disclosure, it's a finance charge, right? So let's see what type of finance charge every financial institution gives, right? Let's look up truth and lending disclosures. Let's see how one looks. Truth and lending disclosure, right? The images. All right, let's go to this one. All right, see if I can blow this up. Oh, hold on. Damn, can I get larger? All right, there we go. Blow that up. So the finance charge, right? We got 379, 379,000 and 379,649.11. All right, there we go. And then we got amount finance, which is $393,372.22. And the total payments, right, is $773,021.33. All right. So we got to figure out, is this accurate on the truth and lender disclosure statement, right? Because this is the generic form that every financial institution does it. How every financial institution does it, right? So let's look at the law and see if this is accurate. Let's go to the finance charge, right? Determination of the finance charge. Except as provided in the section, the amount of the finance charge in connection with any consumer credit transaction shall be determined as the sum of all charges. What does the sum mean? The sum means total of all charges. So the finance charge should equal up to the total of all charges, payable directly or indirectly by the person to whom the credit is extended, right? So it's payable, right? Which means you're supposed to be paid directly or indirectly. Oh, no, 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 no. All right. Now I got that part probably wrong. All right. Which is payable directly or indirectly by the person to whom the credit is extended. All right. So that means you're supposed to pay. And imposed directly or indirectly by the creditor as an incident to the extension of credit, right? So let's go down here, right? Examples of charges which are included in the finance charge, right, include any of the following types of charges which are applicable. So interest, time price differential, and any amount payable under a point, discount, or other system or additional charges. So, well, we need to understand, right, that the finance charge right here, right, shows the interest. This is the interest right here, right? But also, what it's supposed to show, right, is any amount payable under a point, right? So, what's payable? It don't say payable to. It's just say any amount payable, whether it's payable to the creditor or it's payable to the debtor. Any amount payable under a point, right? So wouldn't that be the amount finance, right? The amount finance, that will be what's payable. So the finance charge, right, is the interest, which is right here, plus amount payable, which will be the sum of all charges, right here, right? So have we received accurate material disclosures? All right, right? The materials disclosures means the disclosure as required by the subchapter of the annual percentage rate, the method of determining the finance charge, and the balance upon which a finance charge will be imposed, and the amount of the finance charge, right? So we have received an inaccurate amount of the finance charge, right? So that's one violation. Now, let's go what it says right here, right? Title 15 U.S.C. Section 1611, criminal liability for willful and knowing violation. Whoever willfully and knowingly gives false or inaccurate information or fails to provide information which he is required to disclose under the provisions of this subchapter or any regulation issued thereunder, right, shall be fined not more than 5,000 or in prison not more than 1 year or both. So the finance charge is inaccurate, right? That's one violation, and we could get $5,000 for that. Now let's see the civil liability, right? Except as otherwise provided in this section, any creditor who fails to comply with any requirement imposed under this part, including any requirement under section 1635 of this title, subsection F or G of section 1641 of this title, excuse me, or part D or E of this subchapter, with respect to any person, is liable to such person in an amount equal to the sum of any actual damage sustained by such person as a result of the failure, right? And then two, in cases of an individual action, twice the amount of any finance charge in connection with the transaction, right? So that's crazy. Twice the amount of the finance charge. So let's add this up real quick. How much we would get, how much this person would get. So picture this is you, right? This your finance charge, and it's inaccurate. Now you found out the inaccuracy. Now you sued them, and now they owe you twice the amount of the finance charge. All right. So that would be 773, right? 22 or $21. 21. Oh, hold on, no. $21.33 plus, or we could just put times two. Times two. That would be 1,546,142.66. Just for that, plus the 5,000 for the criminal liability. That's a bag, right? That's a bag right there. But hold on, wait, wait. That's just this right here. But now we got the account as well, right? So the account, you owe this much in your account, right? And to my understanding, this what it says for an account. 15 USC 1660. All right, we're not even gonna go here yet. Treatment of credit balances, but we ain't gonna get to the yet. We're gonna get to the definition of account. All right. So let's go to the definition of account. Account means an extension of credit. When employed in relation to an account, the word used refers only to open-end credit, right? So open-end credit, we got to see what that means. Now, an extension of credit is not an account of deficiency. It's not an account of deficiency. When someone extension, when credit is added to an account, that means that's something that's yours to be used. Right? It's not something to be owed. So this is what an account means. So when you get a statement and they say, "Oh, you owe such and such on an account," but when you look up the definition of an account, you understand that it's an extension of credit. That's not something you owe. That's a balance on an account. That's a credit balance. That's yours. That belongs to you. All right, let's continue. Open-end credit. What does that mean, right? means credit extended under a plan in which a creditor may permit an applicant to make purchase or obtain loans from time to time directly from the creditor or indirectly by use of a credit card, check, or other device. So we already know what a credit card means. It's your social, right? So you use your social, right, to get a loan or auto loan under a plan. We already know what a plan is, right? It will be under an open-end credit plan. Let's look that up. The term open-end credit plan or open-end consumer credit plan means a plan under which the creditor reasonably contemplates repeated transactions, all right, which prescribes the terms of such transactions and which provides for a finance charge. So we already know, we already got the finance charge already. Now, repeated transactions, you're thinking like, all right, you pay for, you got the contract, uh, you got the car, and bang, all the transactions is done, right? All right, so let's look up credit transaction, right? That's what we gotta look. A credit transaction is some kind of transaction, right? So let's look up what credit transaction means. All right, means every aspect of an applicant's dealings with a creditor regarding an application for credit or an existing credit extension of credit, including but not limited to information requirements, investigation procedures, standards of creditworthiness, terms of credit, furnishing of credit information, revocation, alteration, or termination of credit, and collection procedures, right? So with that being said, it's not limited to that, but it's a part of the information requirements. So what I'm trying to get at, right? And let me Google something real quick. So credit transactions often include interest payments to the lender. So every time they send you a statement, right, that is also a form of a credit transaction. All right. Let's just make that understand. Let's just make that clear. So every time they sending you a statement, that's considered a credit transaction. All right. So there are repeated transactions. There's repeated credit transactions. So you will fit the description of an open-end credit, right? On personal loans and auto loans, accounts will fit this description because, right, you are under a plan in which a creditor may permit an applicant to make purchase or obtain loans from time to time directly or indirectly by the use of a credit card, all right? Hold on, no, that's account I'm talking about. Refers to open credit. Anyway, so we understand what account means, right? An extension of credit, when employed in relation to an account, the word used refers only to open-end credit, right? And when we look up open-end credit means extended credit extended under a plan, right? And we already know under 1602, right? we are under a open-end consumer credit plan, means a plan which the creditor reasonably contemplates repeated transactions, right? So we understand that repeated transactions could also mean, right? Credit transactions often include interest payments to the lender, right? And that's what they will call it, interest payments, when you are repaying a loan by when they send you these statements, which is we're gonna get into that. So now that we understand that, the key thing though I want you to understand is that the account is an extension of credit, which means there's a credit balance. All right, there's a credit balance. It's a credit balance. Every account has a credit balance, right? And it's not an account of deficiency. It's not something you owe. And here's what the law says, how they got to treat credit balances. So, treatment of credit balances, right? Whenever a credit balance in excess of $1 is created in connection with a consumer credit transaction through transmittal of funds to a creditor in excess of the total balance due on an account, right? That's what we're talking about. Rebates of unearned finance charge or insurance premiums or amounts otherwise owed to or held for the benefit of an obligor, right? Amounts otherwise owed to or held for the benefit of an obligor, right? The creditor shall credit the amount of the credit balance to the consumer's account, refund any part of the amount of the remaining credit balance upon request of the consumer, and make a good faith effort to refund the consumer by cash, check, or money order any money by cash, check, or money order any part of the amount of the credit balance remaining in the account for more than 6 months. So if account is extended past 6 months, this is what they got to do, right? And you can ask, you can request, right? You can refund any part of the amount of the remaining balance upon request of the consumer. So, for instance, right, let's go back to this. Hold on, no, damn. All right, let's go to this right here. Right, so this is the account, right? So that means we could request whatever is in this account. Request everything, and they must give it, which they are not. They don't like, yeah, you crazy. Well, you could say pursuant to such and such law, and you gotta know how to form your words and let them know the laws which create the credit terms. See, the laws create the credit terms, right? Let's go back here, right? The informed use of credit results from an awareness of the cost thereof by consumers. It is the purpose of this subchapter to assure a meaningful disclosure of credit terms, right? So the law is the credit terms, and these are the credit terms, right? That's given. This is how they gotta treat these accounts, all right? So the law is the credit terms. That's what you need to understand, all right? All right, moving forward. Let's go to adverse action now, right? But first, let's define adverse action right here. Adverse action. The term means a refusal to grant credit in substantially the amount or on substantially the terms requested in an application unless the creditor makes a counteroffer, all right? And the applicant uses or expressly accepts the credit offer. Yeah, I'm not really understanding that last part. So it's I guess unless the creditor make a counter and the applicant uses Oh, that's all right. Unless. So if you accept the counter offer, right, then it's not considered an adverse action, right? But however, right here, a, a termination of an account or an unfavorable change in the terms of an account that does not affect all or substantially all of a class of the creditor's accounts. All right. So an unfavorable change in the terms of an account. So it can't affect all, or it substantially does affect all of a class of the creditor's accounts. All right. So that's what you need to know. A refusal to increase the amount of credit available to an applicant who has made an application for an increase. All right. So this is what you also need to understand. The term does not include a change in the terms of an account expressly agreed by an applicant. Right. Any action or forbearance relating to an account taken in connection with inactivity, default, or delinquency as to that account, a refusal or failure to authorize an account transaction at point of sale or loan, except when the refusal is a termination or unfavorable change in the terms of an account that does not affect all. Except when a refusal is a termination or unful. Yeah, I gotta understand that better. But anyway, let's get to it. So you know what adverse action means under this, right? And we want to focus more on an unfavorable change in the terms of an account. And we know what an account means, an extension of credit. And we already know what they are required to do, right? Which haven't been done. That's why it's an adverse action, right? But reason why they didn't do this because clearly you may have expressly uh, they probably made a counter offer and you accept it or expressly accepts the credit offer, right? You accepted the offer, right? But however, the offer may have if you could prove that it was an unfavorable change in the terms, right? Whether it was an offer or not, the it was an unfavorable change in the terms of the account, right? So it will still be considered an adverse action, right? So let's go to where you at? Where you at? 1691, right? Reason for adverse action, procedure applicable, adverse action defined. All right, so within 30 days, right, or such longer reasonable time as specified in regulations of the Bureau for any class of credit transaction, after receipt of a completed application for credit, a creditor shall notify the applicant of its actions on the application. So, with that being said, right, they only start negotiating after a completed application. Once you've been approved, the application is completed. That's what you need to know, right? And then they start these offers, right? Or they don't say it's an offer. They just give you the truth and lending disclosure statements to say this is what you got to pay, right? And they don't tell you that you are obligated uh The account is yours. You know, everything is already paid for. They don't tell you that, right? When you've been approved, everything is already paid for. You feel me? All right, so let's continue. Each applicant against whom adverse action is taken shall be entitled to a statement of reasons for such action from the creditor. A creditor satisfies this obligation by providing statements of reasons in writing as a matter of course to applicants against whom adverse action is taken, or giving written notification of adverse action which discloses the applicant's right to a statement of reasons within 30 days after receipt by the creditor of a request made within 60 days after such notification. Right? So, right here is saying that after they give you a written, right, disclosure, right, the applicants of your rights to a statement of reasons within 30 days after. Hold on, let me read that again. All right, so let me read it from the top. Each applicant against whom adverse action is taken shall be entitled to a statement of reasons for such action from the creditor. A creditor satisfies this obligation by providing statements of reasons in writing as a matter of course to applicants against whom adverse action is taken, or giving written notification of adverse action which discloses the applicant's right to a statement of reasons within 30 days after receipt by the creditor of a request made within 60 days after such notification, and the identity of the person or office from which such statement may be obtained. Such statement may be given orally if the written notification advises the applicant of his right to have the statement of reasons confirmed in writing on written request, right? So, right, or given written notifications of adverse action which discloses, right, the applicant's rights to a statement of reason within 30 days after receipt by the creditor of a request made within 60 days. Yeah, I believe you got to make the request within 60 days. All right. If you're competent, you'll understand. All right. A statement of reasons meet the requirements of this section only if it contains the specific reasons for the adverse action taken. Where a creditor has been requested by a third party to make a specific extension of credit, directly or indirectly to an applicant, the notification and statement of reasons required by this section may be made directly by such creditor or indirectly through the third party, provided in either case that the identity of the creditor is disclosed. So, for instance, right, when the application is complete and you approve, right, they really not supposed to be making offers, right? They supposed to lay out, they supposed to notify you of the terms of the credit. But the terms of the credit and the conditions they notify you is in the truth and lender disclosures, right? Which is the adverse action because they're saying you owe, which in fact you really don't owe, right? And I'm about to prove and give information on how you don't owe. All right. Right here, it says that the account is an extension of credit, right? If the account is an extension of credit, that means it's a balance and it's your account. It's a credit balance that belongs to you, right? It's not an account of deficiency, it's a credit balance, right? That belongs to you. So you don't owe on that account, right? And then this is how they're supposed to treat the credit balance with these procedures right here. Treatment of credit balances. This is what they're supposed to do. And this is what they haven't done, right? They haven't done this. And this is supposed to happen directly after a completed application. Once the application is completed, they don't supposed to give you truth and lender disclosures stating that you owe, right? That's an adverse action right there if they say you owe, right? And if they pursuant to this section right here, if they're gonna do an adverse action, they gotta put it in writing, right? They gotta give you reasons why, they given they have made an adverse action against you, right? So whether you made the offer, whether you agree to an offer or not, right? They still supposed to disclose before that offer why they committed an adverse action against you, which they haven't. They haven't gave it to you in writing, so they're in violation of this law right here, adverse action. And since the account is belonging to you, right? Wouldn't that be unfair, right? That's hella unfair for them to, change the terms of that account. Like for instance, say for instance, this right here was owed to you $773,000 and 21 oh $773,021.33 was owed to you on the account. Would you agree to not have that? That would be hella unfair if you're supposed to transfer your rights over, you know, unknowingly transfer your rights over. That's hella unfair. Like that's hella greedy. Like they greedy right there. Like anyway, let's continue, right? So that's an adverse action right there. You could get them for that as well. For inaccurate material disclosures, right? And adverse action on an account, right? And this will also for it will also be unauthorized use, right? The term unauthorized use, as used in this section, right, means a use of a credit card by a person other than the cardholder who does not have actual, implied, or apparent authority for such use, and from which the cardholder received no benefit. So the thing is, they might have implied or maybe apparent authority for such use, but the cardholder still need to receive a benefit. Do we receive a benefit from an account? They are benefiting off an account, right? By the use of your credit card. You're not benefiting, so it will be considered unauthorized use. All right, so that's something you need to know. Very important. All right, moving forward. Uh, let's go over some more terms, right? Let's go back to finance charge or definitions, right? So now under this one, we could use this, right? Consumer, a natural person who seeks or acquires goods or services for personal, family, or household use. Now, this whole process is for persons who seeks or acquire goods for services for personal use. Now, if you doing consumer credit, if you're doing transactions under business, yeah, this doesn't apply. This process doesn't apply to you. This is for personal, right? So so if you have a business credit card, yeah, this is not going to work. You gotta this works under this process only works under personal credit cards, personal loans, and auto loans. All right, personal auto loans. All right, and how we know it's personal is when you use your social security number. You ain't using no other type of number, no EIN, right? You're using your social security number, right? A consumer is one that's using his social security number as a credit card. All right, just to get that clear. All right. So now let's purchase money loan, a cash advance which is received by a consumer in return for a finance charge within the meaning of the Truth in Lending Act and Regulation Z, which is applied in whole or substantial part to a purchase of goods or services from a seller, right? All right. The key words is a cash advance which is received by a consumer. Purchase money loan. So, you know, this is what's happening, right? This is what's happening in the transaction. So, what's happening is, right? You've given a dealer or the financial institution your social security card, your credit card. Now, they are the trustees and you the beneficiary, right? You the benefiter. They are acting as trustees and tapping into your trust account and giving so they could pay for the goods. That's why it says, right, a purchase money loan, a cash advance, which is received by a consumer. So whoever receiving this cash advance, right, is receiving it by a consumer, right, in return for a finance charge, which means the cash advance is supposed to pay for the finance charge, right? Because we owe the finance charge. The finance charge is this. Bang, boom. The cash advance is what's being put in the account, right? Which belongs to you, which is supposed to pay for the total payments, which is the finance charge. All right? That's what's happening. The cash advance is the account that is yours. That's the cash advance. All right? To further explain this, let's go to credit acceptance. Yeah, I don't like credit acceptance. Yeah, we're going to blow them out the water real quick, right? So, right? Let me show you the whole process. So I'm going to go back, right? We go credit acceptance, right? Type it in Google. Let's go to their website. We're going to go all the way down, right? And we're going to go to, where's that? We're going to go to, damn, where's that? About Us, right? We're going to go to About Us, Investors, Learn More, right? Reports and Financials, bang. We're going to go there. We're going to read everything and then, know what you're accepting. We're going to go to accept. And then we're going to go all the way down, right? SEC filings page. And then we want to go to the 10Q, right? 10Q, right? Quarterly filings, PDF, bang. All right, here we go, right here. Let it still load. I think it's still loading. All right, there we go. Bang, right? Now let me see if I could zoom this in a little. Uh, damn. Let me see all tools. Oh nope, can't even do that. All right, so I already got one of these, which is the 2019. So let me go to that one. All right. So Form 10Q, right? Credit Acceptance Corporation, right? You can find out all the information they have on it. So basis of presentation, right? Description of business. Let's read the description of business real quick. Let me see if I can zoom in. There we go. Right, zoom in. All right, since 1972, Credit Acceptance has offered financing programs that enable automobile dealers to sell vehicles to consumers regardless of their credit history. Financing programs are offered through a nationwide network of automobile dealers who benefit from the sales of vehicles to consumers who otherwise cannot obtain financing. From repeat and referral sales generated by these same customers, and from sales to customers responding to advertisements for our financing programs, but who actually end up qualifying for traditional financing. Without our financial programs, consumers are often unable to purchase vehicles or they purchase unreliable ones. Further, as we report to the three national credit reporting agencies, an important ancillary benefit of our programs is that we provide consumers with, excuse me, an opportunity to improve their lives by improving their credit score and move on to more traditional sources of financing. We refer to automobile dealers who participate in our programs and who share our commitment to changing consumer lives as dealers, right? Upon enrollment in our financing programs, the dealer enters into a dealer servicing agreement with us that defines the legal relationship between credit acceptance and the dealer. The dealer servicing agreement assigns the responsibilities for administering service and collecting the amounts due on retail installment contracts, referred to as consumer loans, from the dealers to us, right? So the consumer loans are from dealers to them. All right. Anyway, we are an indirect lender from a legal perspective, meaning the consumer loan is originated by the dealer and assigned to us. So the loan is originated by the dealer. So the dealer get the loan from credit acceptance, right? And they assign the obligations to. Anyway, yeah. Let me proceed. Substantially, all of the consumer loans assigned to us are made to consumers with impaired or limited credit histories. The following table shows the percentage of consumer loans assigned to us with either FICO scores below 650 or no FICO scores at all. All right, so let's get into it, right? We have two programs, the portfolio program and the purchase program. Under the portfolio program, we advance money to dealers, right? Referred to as a dealer loan in exchange for the right to service the underlying consumer loans. Under the purchase program, we buy the consumer loans from dealers, right? And keep all amounts collected from the consumer. Dealer loans and purchase loans are collectively referred to as loans. The following table shows the percentage of consumer loans assigned to us as dealer loans and purchase loans for each of the last 5 quarters. All right, portfolio program. As payment for the vehicle, the dealer generally receives the following: a down payment from the consumer, a non-recourse cash payment advance from us, and after the advance balance, cash advance and related dealer loan fees and costs has been recovered. All right, so this is what's going on, to my knowledge, right? This cash payment advance from the financial institution is connected with the purchase money loan, right? So the financial institution, right, is the trustee, which is giving the dealer the money, right? This cash advance payment, right? in return, no, hold on, nope. All right, so to continue, it's my belief, right, that the cash payment advance that the financial institution give to the dealer, I believe that they are splitting the proceeds from the account. So the dealer is actually advancing, no, the financial institution is advancing the dealership some of the money from the account, right? And then as well as making you pay what's on the account as well. So there's how shall I say, there's more than one ledgers going on in the accounting. All right. So we definitely need to do some forensic accounting if we want to find out what's really going on behind in the books, because it's a lot of double dipping. It's a lot of double dipping, right? Instead of them using the money from the account to give to the dealer, they keeping the money from the account for themselves and paying the dealer probably like 30% of what's in the account, but not from what's in the account, but 30% of what would be of the account. And then, keeping the rest for themselves. So that is shiesty right there. Like that's crazy. That cash print that this advance, that's supposed to be what's in the account, which was supposed to be paid to the dealer, and you're supposed to receive the vehicle. Since the financial institution is acting as a trustee for your account, right? They the one that's getting the money out your account, right? Because you the beneficiary, and they the trustee. Any government entity that you give your social security number to automatically become trustee, and you the beneficiary, right? We already know all under the law it says all taxpayers are assessed to pay trust, right? Uh, Damn, I need to find that Supreme Court case. Hold on, let me see if I can find it for you. 1 second. All right, right here, right? Every taxpayer is assessed to pay trust, assessed to Q trust, having sufficient interest in preventing abuse of the trust to be recognized in the field of this court's prerogative jurisdiction as a realtor in the proceedings, as a relator in the proceedings to set sovereign authority in motion by action, whatever the hell that means. But anyway, every taxpayer is assessed to pay trust. We already know they use your social security number as a taxpayer identification ID, which under the internal revenue laws, you can't use a social security number as a tax TIN, a tax identification number. That's against the law. So, but they do it anyway. So, I mean, shit. Listen, for your benefit, I ain't gonna tell you nothing. I ain't gonna say that. But in certain situations, I don't mind acting dumb for my benefit. Sometimes we gotta act dumb. But this is something you don't want to cite, right? You don't want to cite this. You just want to know this is what it is, a trust. That's all you want to know, right? That it's a trust. That's the most important thing. All right. Going back to this, right? Since they got your social, right, which is a part of the trust, Social Security trust, right, or Social Security Assessment trust, right? They are the financial institution is becoming a trustee, and you're the beneficiary. They tapping into your account. They're advancing payment, which is they give payment to the account, which the account they set up the account, which is supposed to be to pay off the debt, right? They're supposed to give that payment to the dealer. But what they do, they do a back end with the dealer, and they try to both get paid. But it's all right. It's all right. So now we got to break the bank. Now we got to sue them, right? And I already show you how to sue them, right? Inaccurate material disclosures, right? Adverse actions, you know, fail to meet requirements, and after we do that, after we get a judgment on consumer law, guess what? Guess what? After we get judgments on consumer law, they still gotta we still gotta deal with this right here. We still gotta deal with this, right? We still gotta deal with this right here. Unauthorized use, right? We still gotta deal with that. So not only is we gonna sue them, right, and get money out of this account. So this is how we calculate this, right? We gonna get what's in the account as well as twice the amount of what's in the account. So that's 3 times the amount, right? But not only that, they got securities on the market. But you don't want to do that yet, right? You don't want to do that. We want to sue them for this, right? We want to let them know, like, yeah, we got you for this. Now that's over 2 million. You feel me? That's gonna be over 2 million right there just for that. Well, in your instance, it probably don't be over 2 million. You probably, I believe a car loan is probably like, anywhere from, well, the finance charge, which is the total amount of payments, is gonna be anywhere from 30,000 to 70,000, depends on the luxury of the car, right? So it's going to be in the 100,000s. But we just dealing with this right here, this example. The securities on the market. Think about it. They still use your social to obtain these securities. So if you could prove, right, through a forensic audit, right, that they got securities, they making money off the securities. Guess what? Yeah, we could get them again. We could double dip. Yeah, we gonna get them again for the securities, right? Get them again for the securities. Why not? Unauthorized use. Yeah, you still benefiting off the car. I'm not receiving no benefit. So what we gonna do with that now? Yeah, that's the same thing with the court systems, right? Now, as I explained, you don't wanna claim no trust, or no, you don't want to mention no bonds or nothing within the court system, right? But after the case is over, oh yeah, they still making money off the bonds and all that. We gonna get them for that. Yeah, we double dipping. So even after the lawsuit, you could sue them first, right? Bang, get all that money and do a financial forensic audit on all the bonds they made off the case. Like, oh yeah, pay that up. Yeah, I want that too. So we double dipping. Yeah, we learning how to double dip now. Yeah, we gonna break the bank fully, right? We're gonna break the bank fully. Get everything that's owed. Yeah, this is reparations right here. You feel me? Yeah, yeah. So let's proceed. Now, as far as learning securities, I got 2 authors that's could be good for you. And after that, I'm gonna conclude. Right? Oh no, no, no. I forgot to tell you now how you go about the procedures of enforcing the consumer laws, right? Now you could do a billing error credit notice, right? Now for auto loans and personal loans, they're gonna say it's a close-end credit, right? They're gonna say it's not open-end credit, it's close-end credit. Now billing error notices are only for open-end credit accounts, but they're gonna say that your account is connected to a close-end credit. But if you could prove By well, how I just showed you that it's an open-end credit, yeah, they can't deny you. They can't deny you, right? If you could prove with the definitions that it's an open-end credit, then yeah, they can't deny you. All right. So with that being said, uh, billing error notice, right, is right here. Now I'm not going to go through the procedures with you. I'll do that in a different video. But USC, right, 1666, right? Oh nope, not that. Take away the D, right? Correction of billing errors. So this is how you this is the guidelines, right, and requirements for writing a billing error notice, right? Or or under uh or under 1640, right? Section 1640, right, for civil liability down here, right? You could still write a letter letting them know to correct errors, right? And they'll still be liable if they choose not to correct the errors, right? So a creditor or assignee has no liability under this section or section 1607 or section 1611 of the title for any failure to comply with any requirement posed under this part or part E if within 60 days after discovering an error, whether pursuant to a final written examination report or a notice issued under Section 1607E of this title through the creditor's or assignee's own procedures and prior to the institution of an action under this section or the receipt of a written notice of the error from the obligor, the creditor or assignee notifies the person concerned, right? So if you write them pursuant to the bill of error notice, right, and they fix it within 60 days, right, they have no liability, which that's something they can't fix, right? They can't fix it, especially if you got the account, if the account has been open past 60 days. Hold on, let me see what it says. If within 60 days after discovering the error. All right, so let's say after discovering error. So you let them know of the error, and after 60 days, if they don't fix it, then they become liable for not correcting the error, right? But if they correct the error, then they don't have no liability. So if they, but then again, you still could get them. That's just for an error though. You still could get them for the adverse action, right? And you also could still get them for unauthorized use, right, of the securities, right? So this is the billing error, right? But you also got to cite the regulations. When y'all citing they violating these laws, you can't just cite the United States codes. You got to cite the regulations for the United States for the statute that you uh saying that they violated, right? So CFR 1026, right? Uh, Let me see. All right, bang. So open-end credits deals with billing error notices, right? Right, billing error resolution. So you give them the billing error notice, right? And this is how they got to resolve it with the requirements in here to resolve it. All right. Now I'm not gonna go over it. I'll let y'all go over it because I'll do that in a different video. I'm already at an hour already. So uh now for the securities, I got two authors I could guide y'all to. One of them is Ignorance Be Gone, which is known as Path for Freedom on YouTube, right? Path for Freedom. Let me see. Yep. Path to Freedom, all right? This is her Instagram. She working with a younger guy as well, very intelligent. I believe both of them is like Moors and Indians or something like that. Yeah, don't get me started on the Indians. I'm a Moor. All right, but anyway, she got a lot of processes. Show you how to enforce the UCC when dealing with the consumer credit. Show you how to endorse stamps dealing with your accounts, the statements or your accounts, right? The Treasury book. Show you how to open up a Treasury direct account, right? Do not detain. So she got a lot of stuff too as well. But however, some of this stuff I don't agree with because stamp endorse, right? To send when you stamp the financial instrument, right? For the account. Now the thing is, I feel like this is going along to get along. Nah, we breaking the bank. Fuck all that going along to get along shit. Like we gotta shut these niggas down. Excuse my French, right? We shutting them down. You feel me? Letting them know like they in violation, right? We don't want to go along to get along because they still depriving humanity of basic rights. So nah, yeah, we could learn the process, the stamp endorsement if you want to. You feel me? It will make your life easier and all that. We could open up a Treasury direct account, right? That's going along to get along, right? We could do that, working with the Treasury and all that. But they all frauds. This whole government is a fraud. Like, listen, we need a whole new government. I'm sorry, or at least new people in the government that's really gonna, you know, help the people out and how should I say, honor their oaths and not create all these intricate systems, you know, that's really complicated for the average person. Now, if you are for the average person, we ain't going along to get along, all right? Because the average person don't know how to go along to get along, all right? So, with that being said, you do want to learn this, right? This will definitely help you out in your consumer process, and uh, where is it at? I believe she had a securities book, show you how to do the securities and all that. I think she took that down, if anything. It's probably the stamp endorse. This is probably part of the securities. And then you got Don Kalon. Don Kalon got a book too as well, right? His book is called Financial Freedom, Guide for Private Investors. Now, I'm not sure. I got the PDF. I can't give it out. You feel me? Because it's his to give and sell. But I haven't even read it. To tell you the truth, maybe I need to read it, but I'm already doing too much. Uh, just see if you can get his book. But however, as far as his other processes, I bought one of his books called a W-4. To help you with your tax status, I guess, and all that. Now, how he defines state, he used the capital S as a state, which is inaccurate. All right, that is inaccurate right there. So that tells me he's probably kind of incompetent when it comes to foreign jurisdictions as well, or comparing a foreign state to a district state. So you got to be mindful of the information you get from him as well. And there's no respect to you, all right, Don Kilon? There's no disrespect to you. I'm just calling it out as I see it. That's it. You feel me? Now, If you're trying to critique me, on if you got anything to say about that, you just gonna have to watch the how to maintain your sovereignty video and see where I'm coming from. But other than that, I'm gonna conclude here, man. I'm already at an hour and 25 minutes. There's definitely more to say about this subject that I haven't got into. Now, if you are gonna use this process, do not mention the consumer credit transaction being a loan. Do not mention it's a promissory note or none of that. Your case will get thrown out. All right. Under consumer law, it's considered a credit sale. So do not mention anything about a loan or nothing. All right. Just mention they are violating certain procedures. Right. They fail to give certain disclosures. They fail to meet certain credit terms, which result in a adverse action. All right. Stuff like that. Uh, Now I will do a video on billing error credit notice, how to give a billing error credit notice, and the wording to apply as well. So look out for that. But for now, if you got enough information to handle business and stand on business by yourself, then please stand on business and teach others how to stand on business, because we in it to break the bank. We ain't trying to get along, go along to get along. Now we ain't with none of that. Especially if you're a non-ether being, you the highest vibration on the planet. You feel me? You're supposed to be living in. You supposed to be of a loving and compassionate nature, which will activate your gamma brainwaves, which will keep you enlightened. All right. So with that being said, stay vigilant and you'll prosper. Peace and love.